Okay, what's going on with the fourplexes? Well, there really aren't any, but here's the Ada and Canyon County duplex and fourplex trends. Inventory did creep up a little bit to 34 with Ada County duplexes going up the most with 5 more. Pending deals often have to follow the inventory because you can't go pending if it doesn't exist. And so they bumped up a little bit, and as did sales. Absorption was just over a month in all categories, except for Ada County duplexes, which is even less than a month. But of course, 3 to 6 months is balanced. So we certainly have that seller's market continuing. And looking back at Tony Drost's data of Swope Investment Properties and the Boise Investment Properties team, he calculates the cap rates each month and has tracked that forever. And here's a cool segment of his graph showing 2019, 2020, and 21, a quarterly look, showing the decrease in cap rates that we're experiencing with the increases in prices. He does his cap rates using current rents, actual rents. Whenever you see my pro forma referencing current or actual, that's what it's rented for today. A lot of times to try to eke out returns, we're looking at what the market rent is, because as Tom was saying at the beginning, as we're chatting, rents are going up so quickly. He raised his rents $100. Nobody seems to be moving out with that increase. And so as rents are increasing like that, if you didn't rent it just yesterday, perhaps that actual current rent is indeed low. And so for the average price on fourplexes, you can see what the trend's doing there. Let me see if I can get my pointer back to show you the rest of that. No. All right, I guess I'm stuck on pointer view for now. So, but you can see that the average price crept up a little bit. And in March, it was a little higher than it is now, but I think that was more a product of what it, sorry, I was just trying to play here, what actually sold in March. So I don't think the fact that it spiked in March and then right now, if it's cut off, it's just a little bit closer to where it was in February. I think that might be a product of what sold. Okay. Here is something that says, yeah, average price might be back below 800,000 in May, but there's this. 1941 Priest just hit the market for $1 million. It's a 70s fourplex now. They've done a really good job keeping it updated and putting money into it. But when I look at what's active in fourplexes in Ada right now, there's only 2, and this is one of them. 3.9% market cap rate. But as you'll see, there's a pretty big difference between the market and the actual current rents. And so it'll be interesting. I'm watching that one to see what happens with it. And if it sells at $1 million. And then I might have to place some more phone calls to sellers saying, hey, you said when it hit $1 million, we were going to sell. We're there. But TBD, we'll see if that fourplex sells. Here's everything that's active right now in fourplexes. Those profit circle fourplexes are newer. And again, that Priest fourplex is 70s. Okay, price per square foot in fourplexes, it went up to $225, and the gross rent multiplier went up to 211. Of course, that's the sales price over the gross rents. So the lower that number is, the better for investors in terms of their returns. And that price per square foot chart you can see has also been put through the test of time, with 2019 to 2021 showing the overall long-term trend in how much you get versus how much you pay. Price per unit was above 200 in March, and then it came down a little bit in May. And again, I think it's a product of what sold. And then days on market is down significantly compared to previous years. And if you don't see it there, it's 5 days on market is what we're seeing on the average days on market view. And for Ada, Canyon, Duplex, and Fourplex trends. Here's a look at what's been happening. The orange up here in the Canyon County slide shows duplexes, and the blue is fourplexes. And these are the active listings. You can't have pendings and sales without having active listings. So we know that the pending and sales data will kind of be following those trends. And here's what we're hearing at the water cooler. Our clients who have done 98 deals, Mike Swope was kind enough to bring me in with his clients that he's done 98 deals with. And they say, as we help them sell, we have to keep pinching ourselves to believe in this hyper seller's market. It would have been nice to live through a few of these in our career. And Mike's response was, I'm not sure we'll ever see a market like this again. It's that profound, this market is. Here's what we see in the 5+ units. Now, all those in green, those are all trailer parks. So we've got some of the trailer park owners cashing out of their trailer parks. And some of them, like Syringa, has a zoning thing. So that price looked pretty compelling, but it's not zoned to be a trailer park. And so there's some buyer hesitancy on picking that up, just in case the city were to decide it ever didn't want to use it or want it used that way. So the rental market update, Craig is kind enough to let us know, basically things are flying off the shelf. We had this quote from Kat at first rate, but we've got record high prices, we've got record low inventory, and it's harder and harder for people to move. So Tom, just like you said at the beginning, it's if you held back your rents last year because of COVID and uncertainty of what was going on, it is indeed reasonable to go ahead and do those increases now. Everyone held their breath last year, but because they didn't know what was going to go on with COVID and all that, and what has happened is, people have come and filled up all our housing. So if you fell behind in your rents, it's a safer time than it was a year ago today to raise those rents, or maybe safer than we knew it would be a year ago today. Look at that vacancy. I mean, unprecedented, not on the chart, not on this chart, and not on, if we did a historical vacancy chart that went back, I just don't know if I've seen it that low. So all of them, multifamily, single family. And Craig, I value any input you have. This is the NARPM data. So they only do this data quarterly. And, obviously it's an average of all respondents. And I know you do a lot of stuff in the downtown BSU area. AVID investors, how many here with either a wave or using the fancy features on your screen, how many have rentals in the downtown or the BSU area? Somewhere in that, the bench, the downtown, Tom, I do. Okay. Steve does too, great. Okay. So Craig, why don't you let us know how you might adjust these numbers if we were just looking in that corridor, that nearest downtown bench, BSU North End corridor.
Well, I find that it depends where. Like it's like the North End is going to be more than anywhere else. You're going to get more rent in the North End, and then probably Southeast because it's close to BSU. And then the bench, we probably get lower rents on the bench than we do. Well, we definitely get lower rents on the bench than we do in the North End. These prices to me seem very low for everywhere, in my opinion.
Yeah, there's a delay on this data too. And I don't know how quickly you've seen the prices spiking up. Do you feel like something you would rent this month would have been even cheaper just 2 months ago?
Yes, it's going up quickly. I just rented one on the bench up by on Roosevelt, south of Overland. It's a 2-bedroom, 1-bath, and it went for 14. So, and then we just did one over by BSU. It's a 3-bedroom, 2-bath. It's a skinny house. and that one rented for 2,200.
Oh, great.
So,
Okay.
so to me, these numbers look really low to me.
Okay.
At
And these are
least what we're-
multifamily. Let's go to the single family since you were just mentioning single family. And it looks like still they're below what you're quoting significantly.
Significantly.
Mhm.
I rented one in the North End for, it's a 3-bedroom for 2,000 a month. And it's not in good shape,
Okay.
but it's North End. People want to live in the North End, so.